Hello traders, welcome back to Bunnex Investment Group. In this video, we will talk about the most volatile session, which is the London session. Basically, the Forex market has three trading sessions, which are the Asian, London, and the New York session. The London session starts at 7 a.m. GMT to 1 o'clock GMT. You just need to convert these times for you to get the actual times of your time zone. During this time, there are several traders from the Asian session going into the London session. This is the reason why it's more volatile and has a lot of movements. If rules are drawn, one can consistently trade the London session effectively and profitably. London session structure. Whenever we are coming into a new trading session, the market makers presents fake outs or fake moves. They use this time to hit stop losses and induce traders in opposite direction they intend to take. So they will tell you to buy whilst the market will actually sell. That is where we see traders saying, when I buy, the market sells, when I sell, the market buys. So basically that will be the scenario that is being practiced by the market makers. The good thing is that they leave traceable patterns which we can follow and trade basing on. So in this strategy, we use two exponential moving averages that will help us get these entries with ease within the London session. So this is the London session setup, which will actually view deeper on trading charts. In this particular case, we can see that there is this particular impulse to the upside. We call this a trend setter. A trend setter is basically equivalent to level 1 of our market maker cycle. Therefore, we need to see and validate a proper peak formation low or peak formation high for us to trade the London session. If we do not do so, we are in a higher probability that we are more on the gambling side. After that, on the following day of the level 1, whereby level 1 was actually prior to what we want to trade, we actually need to see the Asian session following rules that we'll review later in this lecture. In this particular case, we can see the Asian session is used to induce traders because it's an accumulation of orders which will later be used within the London session long sustained run. So our duty or our job is to be able to buy in the London session or sell in the London session if they are now going to make a long sustained run. In this particular case, we can see there is a setup that is being issued, which we can simply call a W pattern. So basically, if we see a W pattern with the conditions that I'll talk about later, we'll actually take that with ease. Our exit will be half of the one ADR value, and we are done. Why? Because within level 2 that we'll be trading, or level 3, the market can reverse anytime. So the summarized explanation of the illustration goes down to these points. A peak formation low or high must be visible and confirmed. Asian session of the day of the trading day must not be greater than half the ADR of that pair. Meaning, if the ADR of Euro USD is 50 pips, we must not see an Asian session that is blowing above 25 pips. It should be half the average daily range for that particular pair. The prior day of trading must have a 5200 EMA on the M15 time frame. We must see a crossover of the 50 and the 200 EMA on the prior day of the day of trading. A clear pattern must be seen as an M or W pattern of the 200 EMA. We are saying a W or an M pattern of the 200 EMA is our entry trigger. Before we go forth, we have a very beautiful program which is currently enrolling, becoming a 7-figure trader program. Be sure to be part of this program because we are actually now working towards empowering traders to become independent and to become traders of higher figures in utilization of the prop firms. So use the link in the description box below to be part of this particular program. Let's now go over the charts and have some examples. So we are going to use pound against dollar. And on pound against dollar, the first thing is always for us to count levels so that we can have the market bias, or we can see where the market is actually going. In this particular case, we can see that the market is coming from this particular point and it went to the downside. We had 2 points or 2 zones where the market actually bounced twice, meaning that this was a higher probability point of peak formation, right? So from that peak formation, counting our levels, which we define as our impulsive rises or drop, we can see that we had a rise to the upside, right? That actually had a neckline at this particular point. And then from there, we had a pullback and then another level to the upside. So we've said our entry setup is anticipated when we are at level 2 or level 3, meaning that we were expecting to have our setup here or our setup there. So this is actually H1 time frame, and we've said we trade off the M15 time frame. On this particular case, we can see that we had a crossover on this particular day. We said we cannot trade on the day of the crossover, but the prior day must have a crossover. We had the first leg and then we had the second leg. These retests of the first leg level are actually points to actually add more positions, because they are just confirming that market makers have decided to set that level as a low of day. So in this particular case, we had our Asian session, which started at this particular point and ended at that particular point. We had a beautiful W pattern and the market went to the upside. This was for level 3 flow to the upside, which we were going to make our entry at that particular point. From there, we had 3 levels to the upside, and after 3 levels to the upside, we had a multi-session M1, a first leg, second leg, and then we had a reset. From that reset, we start again to make our count. Level 1 was seen, and what are we now waiting for? We are now waiting for to see a pattern in the London session. Going on the M15 time frame, this is what it looks like. We had the first level, which had a 5200 EMA cross, and then the Asian session came, which was within the range that we always anticipate and expect. We can see a beautiful W pattern, which was issued, and the market went our way. From that, we were still expecting to see the market to go up, because it was issued in level 2, level 2, level 3, and we reached the high of the cycle. From that, the market makers decided to reverse the markets and to start going to the downside. Within that flow to the downside, we were only looking for entries after level 1 was issued. Level 1 was issued, and the first entry was actually issued, this time an M pattern, but unfortunately it was taken out on the following day. Then going forth, we can see in level 3, Asian session was within the boundaries or within the limits that we expect. It was actually a good Asian session where we had first leg and then the second leg, and the market went to the downside. On that note, please go and download our free ebook. I'll leave the link in the description box below. It will actually give you enlightenment of becoming a 7-figure trader. On that note, have a beautiful day. See you in the next one.